Brian, I guess no real surprise in terms of QE. Why do you think the market stocks sold off a little bit following the Fed announcement?
There weren't a lot of surprises in the FOMC statement, but there were a few, and I think that's probably why the market took a little bit of a breather here. It wasn't a dramatic move in the markets, reflecting the fact that there was just a slight change to some of the language. It was actually a bit more on the hawkish side than what the previous statement was. And that's actually reflected in, if you look at the dissenting votes here. No longer did Fischer or Plosser dissent, but instead Kocherlakota from the Minneapolis Fed, who is quite dovish, he dissented, mainly because they removed the statement in there about the significant underutilization of labor resources. They changed it to saying that underutilization of labor resources has diminished over time. And that's just slightly ever so more hawkish than what it previously was.
Well, it's interesting, and translated basically means that more people are getting jobs. Finally, we're seeing some jobs growth. The Fed also saying the economy essentially is on track despite some worries we have in other places like Europe. So if that's the case, Brian, why do they need to be so accommodative for a considerable time?
That's probably the thing that we're going to see changed next, but I think they might want to wait until the December meeting, mainly because I think they're trying to take a very gradual and incremental approach to making changes to monetary policy. They didn't want to take this as an opportunity to do a wholesale change to the language. So perhaps at the December meeting, when there will be a press conference afterwards, they'll change the considerable time language to something else that's a little bit more predictable and less vague. I think that when we look at what the Fed is likely to do, this is just reflecting the gradual, predictable nature of the Fed under Chair Yellen.